Good morning and welcome back. Those of you that were with us on Wednesday, this is Jerry Hafer from the AMAC Foundation, one of the Foundation's Social Security advisors. And we're here today with part two of our Women and Social Security webinar. Part one, those of you that were on part one, we covered a lot of material, basically a wide range of general topics, things like types of benefits, how benefits are calculated, the COLA process, spousal benefits and widow benefits, and this issue of deemed filing. We covered a little bit of disability. We're going to cover more of that today. Today, though, we're going to focus on some specific areas of Social Security benefits, particularly children, dependent parents, the family maximum, which is an intriguing mathematical exercise. So we're going to talk about that. We're going to talk briefly about the windfall elimination provision and the government pension offset, only briefly because, they were just repealed, but there are some things we want to talk about there just for briefly. We're going to talk about the wonderful topic of taxation of Social Security benefits, really a topic of considerable interest these days. Then we're going to touch on some specialized topics, benefits for people that live abroad. We're going to talk about some Medicare issues, not in a whole lot of depth because it's primarily Social Security, but we're going to touch on some things there, like the hold harmless provision and the IRMA process. So we'll touch on those as well. And specifically, I need to talk first of all about our infamous disclaimer. So I'm going to read that to you quickly. The material presented today is provided by the AMAC Foundation Social Security Advisors, certified by the National Social Security Association, LLC. They do not necessarily represent the views of the Social Security Administration. The information presented today does not constitute legal, financial, or tax advice and should be used for informational purposes only. Since individual circumstances vary, you should consult your legal, tax, or financial advisor before making any financial decisions. So with that out of the way, a quick review of what we're going to talk about today. As I mentioned earlier, benefits for children, as well as adult disabled children and adopted children and stepchildren. There are a lot of nuances of those policies that we need to cover. Dependent parents we're going to talk about, then we're going to talk a little bit more about disability and the family maximum issue that I mentioned earlier. We're going to touch briefly on WEP and GPO. We're going to talk about taxation of benefits and the issue of receiving Social Security benefits when you live abroad. And then we're going to touch on some Medicare issues. That's pretty much the landscape for today. And we're going to begin by talking about children's benefits. Sharon is going to take over in a minute, but just want to point out that today, about 6.5% of all Social Security beneficiaries are children. 3 million in total children that are under 18 receiving Social Security benefits. So it's a pretty big area, and a lot of people have a lot of interest in it. We're going to cover the eligibility rules for children's benefits, and we're going to talk about how they apply to adopted children as well as disabled children. Tends to be a very complex area, and there are a lot of specific roles that you need to know about. So with that, I'm going to throw the ball to Sharon.
Yeah, Social Security is more than just a retirement benefit for yourself. It also helps you to protect your family. If a parent is disabled or retired and they are eligible for Social Security benefits, or if a parent is deceased and has worked long enough in a job where they paid Social Security taxes, Social Security will provide benefits for the children. A child must be unmarried and under the age of 18, 19 if full-time student, grade 12 or under, 18 or older, with a disability that began before age 22. Now, that disabled adult child will get benefits indefinitely for the remainder of their life. and the child that's still a full-time student will receive their benefits until they graduate from high school or turn 19, whichever comes first. Now, there's also benefits that can be available for a stepchild, grandchild, or an adopted child. The parent must be disabled or retired and entitled to Social Security benefits. And again, the parent must have worked long enough in a job where they paid Social Security taxes.
Sharon, before we move on, just a quick question. We do get a lot of questions from people that have a child that's in college. So how does that factor into the situation here?
There are no benefits available for children in college. They're probably hearing that because years ago, children in college could get benefits until they turned 22, but
Right.
that was stopped back in the 80s and it's no longer available to college students. There has been some talk about putting it back, but nothing has been passed as of this time.
Yeah, that's one of those things that was the way it used to be, and it's a lingering thing, and we do get questions about it from time to time.
Mhm.
So thanks for explaining that.
Okay, if you adopt a child that's already receiving benefits in a case where the parents have died in an accident, those children get to keep those Social Security benefits.
The benefits will continue. So, and then for a stepchildren or stepchild or stepchildren, dependent on the step parent, dependency must be at least one half of the financial support and maintenance of that child or children. And if the parent and step parent divorce, the stepchild's benefits will end the following a month in which the divorce is final. So, um, go forward. Okay. So if the disability began before the child, let's go into disabled children. If the disability began before the child reached age 22, they can receive benefits on the record of the parent. Now, as Sharon is saying, these benefits do not, I don't want to say expire, but they do not end when the child reaches 19. After reaching age 18, can apply for supplemental Social Security income as SSI. Then when the parent retires or becomes disabled, the disabled child must file for a disabled adult child benefits on the parent's record. Okay, so.
Okay, well, one thing I didn't mention early on is if you have any questions, feel free to drop them into the chat and we'll address them at the end of the session. But I know these rules tend to be a little complicated at times. So if you have any questions or you'd like anything re-explained, just drop a note in the chat and we'll get back to it at the end.
Okay.
Okay.
So let's go on to the next slide. Okay.
The
This is a
issue,
very, go ahead.
I just want to say the issue of dependent children or dependent parents is something that comes up from time to time too. And statistically, there are, believe it or not, about 1,000 parents that receive workplace Social Security benefits based on a worker's record. Again, it's kind of a complicated thing, doesn't happen very often, but still, I think it's something we need to understand. So go ahead, Eileen.
Well, the parent has to be financially dependent on the deceased child. The survivor must be at least 62 years old. And like I said, it has to, that parent has to receive at least 50% of the support at the time of the death. They must not be remarried after the death. And they really do have to prove to Social Security in a timely manner all, the proof of being 50% dependent on the thing. Must not be entitled to their own retirement benefit that is greater than or equal to the parent benefit. And the parent, for a single dependent parent, is 82.5% of the deceased's PIA, 75% each for the two parent situation. Okay. So.
Okay. Okay, now we're going to We're going to move next into the SSDI issue, Social Security Disability Insurance. And this is a substantial part of Social Security. There are about $152 billion paid out in disability every year. That's from the 2023 records. So it's a pretty big, pretty big area. And it's something that we want to cover so that you know the rules on disability. So Eileen, I think we're going to continue with you on this.
Yes. Now this, SSDI is Social Security Disability Insurance. Remember that word insurance. All right, because it will come back. So the general rules are you must be expected to last longer than 12 months. That means you cannot work for more than 12 months, or the condition must be considered to result in your death. You must qualify on your own work record. You cannot qualify on your spouse's work record. It has to be on your own work record. And the year of disability becomes your full retirement age benefit for benefit calculations. So, now this is where the insurance part comes in. You must have worked at least 5 years out of the last 10 years before you became disabled. So there are many people who do not qualify for that, and they did not work. We see a few, they might have worked just before they were married or maybe the beginning of the marriage, but haven't worked in a long time, and they want to apply for, something comes up and they want to apply for SSDI. And we have to ask them, have you worked in the last 5 years? And they say, no, unfortunately you don't. So SSDI benefits continue until your full retirement age, then converts to the retirement benefit. Basically, SSDI benefits are paid out of a separate trust fund. And then once you reach that, your full retirement age, your money, it doesn't very rarely changes, but it comes out of a different trust fund. It comes out of the old age trust fund. That's what they call retirement benefits. I'm sorry, old age. So, and if you become disabled after the age of 62, but before your full retirement age, that's another question. We have a lot of people that are older than their full retirement age. Something happens. They said, well, can I get disability so I can get more money? And we say, no, you're over your full retirement age. So, however, if you're after the age of 62 and before your full retirement age, you can file for disability and your reduced retirement benefit at the same time. This at least give you some money until your case is pending. And right now, they generally say it takes 9 months for you to get a decision on disability. So, if you can't go without money for that much, at least we'll give you some money coming into the house. Okay. So if you become disabled after you have already started receiving your retirement benefits, the option, and you must be under your full retirement age, the option is to file for disability benefits. Benefit will be reduced by the months prior to the month of disability eligibility. Okay, so let's go in age 31 and older, you required credits because of 10-year period range from 20 to 40, depending on the age you became disabled. And if the SSDI applicant is under the age of 31, before age 24, you may qualify if you have 6 credits earned in a 3-year period ending when your disability started. And then at age 24 to 31, you may qualify if you have credit for working half the time between age 21 and the time you became disabled. So there is, qualifications of not only your disability, because there is a whole list, and you can find that on Social Security website of disability. But there's also credits involved, the years you worked. So it's a complicated issue. And if you don't have any questions, you can always contact us. We'll try to help you through it. All right.
Yeah, and this is one of the reasons we say that so much of Social Security is situational. It just absolutely depends on your individual situation. But one of the things that we can do is help you interpret the rules. So,
Okay. So if you're eligible for spousal benefits and that benefit would be higher than your Social Security the SSDI benefit. The option is to apply as early as age 62 for your spousal benefit, but please note that it will be permanently reduced. One thing about SSDI, they're not affected by deemed filing rules, which we discussed in Wednesday's thing about deemed filing. You can delay taking your spousal benefit until your full retirement age to receive the full 50% of your spouse's or ex-spouse's benefit. So you can stay on your SSDI, wait till your full retirement age, and then apply for if your spousal benefit is going to be more than. So you
Okay.
can do that. So you don't get it permanently reduced. Okay.
Okay, now we'll just take a deep breath and jump into family maximum.
Sharon, go for it.
Oh, if I can talk again. Okay, the family max. Yeah, this takes a lot of people by surprise. Because when you read the rule, everyone's entitled to 50%. Everyone's entitled to 75% of the person's benefit. But then comes the family max. And this is just to give you an example of what goes into the calculation of them determining how much is available to the family of the number holder, the person whose Social Security benefits, the dependent benefits are going to be based on how much is available to them. And it can produce a maximum benefit between 150% and 188% of the worker's PIA. That's the primary insurance amount, as we mentioned on Wednesday. It's equal to the full retirement age.
And this is why when somebody comes to us with a benefit situation like this, we have to sit down with them and go over their individual situation and help them through the calculation because it gets a little complex. So I know it's one of Sharon's favorite topics. So
I like what it says on the Social Security website, but I'll mention that when I get to that part.
yeah.
Formula for disability benefits. Now, if someone becomes disabled, the family maximum is more restrictive for the retirement and survivor benefits. The family maximum for a disabled worker is only 85% of the worker's AMI, versus 90% that retirement benefit uses. And the benefits available to the family cannot be more than 150% or less than 100% of the worker's PIA. It doesn't happen a lot, but there can actually be situations, and there are, where the dependents aren't even eligible for dependent benefits.
And now I know in that explanation, Sharon threw out a couple of terms that go back to what we talked about on Wednesday. So just a quick refresher. AMI is the average indexed monthly earnings. In other words, it's the average of your earnings in your work record that Social Security maintains. And PIA is the primary insurance amount, which is the base benefit at full retirement age. That's calculated based on AMI. And so I just want to just reiterate those. Those that were in the session on Wednesday will remember how we talked about calculating the AMI and the PIA. So this is how those numbers apply to disability benefits and the family maximum. So more rules.
Okay, the rules just described apply to most retirement survivors and SSDI situations. There are additional rules for more complicated situations. Examples, you have individuals receiving both a worker's benefit and a partial spouse's benefit, child and care benefits, or combined family max cases where you have duly entitled beneficiaries. Individuals entitled to workers' benefits based on their own earnings as auxiliary benefits based on someone else's earnings family maximum only applies to the auxiliary portion of the benefit. The family maximum never reduces or limits married couples benefits. There is no family maximum just based on each of your benefits. It's when there's dependent benefits available that it comes into play. A person qualifying for auxiliary benefits on one or more earning records, they take the sum of the family maximums established for each worker, but not exceeding statutory limits for combined family maximums. The statutory limit for PIAs first being combined in 2025 is $7,295.40. And what this means is they just look at, you got two parents, both eligible for benefits. So these children are eligible on both their records. Well, they are going to take both their benefits to determine the family max, but regardless if they, how high both benefits are, the family max cannot go over that limit, and that does change each year. It usually goes up.
So you can see from all that we're quite a ways into the weeds when it comes to the family maximum, and that's why we typically, when someone has a question that drifts into the family maximum, we basically have to take the time and explain their whole situation. But it gets very complex. And
Oh, yes, it does. If you
yeah,
look at the combined family maximum on the Social Security website, they say,
yeah,
do not try this on your own. This has to be done manually. And Social Security has even been known to make a mistake. So
yeah,
it's an interesting calculation.
yep. Okay. Moving into the windfall elimination provision and the government pension offset. As I said at the beginning, we're not going to talk a whole lot about this because it has just been repealed through Congress. The president signed the repeal bill on January 5th, and Social Security is still working out the details of what that actually means because there is some retroactivity involved. And it's a situation that there have been a number of bills submitted in Congress over the past 25 years or so to accomplish the repeal, and it finally has happened. So, Sharon, you just want to give us some of the quick highlights?
Yeah, these two weapon GPO, windfall elimination provision and government pension offset is their full names. These only affected people that worked in a position that received a pension but never paid into the Social Security system. And there had been special calculations created to reduce the amount of benefits they could receive due to their pensions. Well, as that is no longer the case, they're going to be refunding any reductions back to January 2024 is the first month that a refund is due for. And anyone affected by this, if you're already receiving your benefits, do not do anything. Social Security's working on getting them taken care of. If you have never applied for your benefits, call Social Security and make an appointment to call. You can call the 800 number, or I would recommend finding the number to your local Social Security office to make that appointment. Now, if you have never applied for a spousal benefit, in that case, you need to call. If you applied for a spousal benefit but didn't get it, you don't need to call.
There are more details on the Social Security website at www.ssa.gov. If you're affected by this, I would recommend checking that because that's where they basically are doing the updates. So,
Social Security has actually put a separate header
mhm,
page on their
yep,
website that is designed to keep people updated on what's happening because this is an unfolding
oh yeah,
situation, and it's going to take them a long time to figure out how to do this, particularly the retroactivity.
yeah.
But as Eileen just mentioned, that website has a header page that when you
Mhm.
go to ssa.gov, that's the first thing you'll see, and it's just they update it as decisions are made. So that's the place to
Yeah.
go if you have questions.
Yeah, and I recently read a thing where they've been receiving 7,000 calls a day, and
Yeah,
people are actually walking into the Social Security office asking about this. So, it's easier just to go to that website to get the updates because they really don't know anything. You know, eventually it gets down to the weeds, but all decisions are made up top, and then they're, go through the channels and everything else. So if
yeah. I
that's,
I just can't imagine the amount of volume they're dealing with at
oh,
SSA because there are millions of people that are affected by this, and
3
obviously,
million.
yeah, and obviously they want to know what's going to happen individually. So
Mhm.
7,000 a day doesn't surprise me. In fact, it surprised me as being a little low, but
Yeah. Well,
that'll
we
take.
also get a lot of call when they first did it, they were calling us, I mean, constantly. So, and we actually have repeat calls. I mean, when are they gonna, have you heard anything? Have you heard anything? Have you heard anything? And we always direct them back to the SSA.gov because that's where we get our updates as well. So,
Right, right. So it's a unfolding situation, and
yeah.
uh, we'll see what happens. Okay, moving into a topic of considerable interest these days in the popular press, and I won't
No
say
boy.
more of that, but the taxation of Social Security benefits. I think so many people that are affected by this, and that's a lot of people, are starting to look into it and pay attention to it. The Social Security amendments back in 1983, when Social Security was facing a financial catastrophe at that point, um, one of the provisions that was put into place as part of sustaining Social Security was to begin taxing Social Security benefits. The thresholds that were put into place were intended to just affect a small number of people, up less than 10% actually of the taxpaying public. So it wasn't looked at as a major item back then. But the problem is the thresholds for when that tax kicks in on your Social Security or on your federal income tax return that were set in 1983 have not been adjusted. They were adjusted in 1993, but they were actually, that was when another tier was put in to increase the amount of taxation. So, we're talking about 3 or 4 decades of the same thresholds. And so now, statistically, well more than 50% of Social Security beneficiaries are paying income tax on their benefits. So now it's become a much more noticeable impact on your net benefit. Let's put it that way. Um, I think that we want to cover just some of the general points on this. So I think, Sharon, are you going to kick in on this?
Yeah, on an average, if your only income is Social Security, your benefits are not going to be taxable. But at today's prices, anyone that has the misfortune of that's all they have to live on, are well aware that they're having a hard time making ends meet. Oh, okay. So if you have other income, pensions, wages from employment, interest, etc., your benefits will most likely be subject to taxation. It depends on the modified adjusted gross income for you for your filing status. If you have other income when you become widowed, even though your income goes down, you will pay more in taxes due to your Social Security benefits because your filing status changes to
Mhm.
single, and that's a quite a large increase in taxes.
Yeah.
Your modified adjusted gross income includes income from wages, pensions, interest, self-employment, etc. Anything that you're pretty much able to deduct on your tax return so you don't pay taxes on it gets calculated back in for your modified adjusted gross income, including 50% of your Social Security taxes. That's where you're pretty much guaranteed you are going to pay taxes on that other income.
Yeah.
And here's a list of the most common deductions that will be added back in. I mean, everything, half your self-employment tax, student loan interest, anything that's deductible is not deductible in your modified adjusted gross income.
Yeah.
And these are the tax tables that determine if your benefits are going to be taxed or not. As Jerry mentioned, these limits were set in 1983. Inflation has gone up quite a bit since then. But for a single person, less than 25,000, you don't pay any taxes. Now, where people get confused, they think they can go out there and make $24,000. But they're going to add in 50% of your Social Security benefits, and they're going to add in anything that you deducted on your tax return. And once you go over 34,000, you're going to pay up to 85% on taxes on up to 85% of your Social Security benefits. But this is based on your own personal tax rate. It's not like 50 cents on the dollar or 85 cents on the dollar. And married filing joint, it's even easier to go over that limit because less than 32,000, you start paying taxes on your Social Security benefits. More than 44,000, you pay on up to 85% of your Social Security benefits. And married and filing separately doesn't get you out of that. If you live together, you're going to pay taxes on 100% of your Social Security taxes.
Isn't, even if it's one day a year, right, Sharon? They
aren't allowed to live together at all.
Yeah.
They don't live together. I think they're at the single bracket. But if they live together, it's 100% of your benefits you pay taxes on.
So that's a quick recap of the whole Social Security, federal income tax and Social Security issue. I would point out that just recently, in fact, within the past 2 weeks, I think it is, a bill was introduced in Congress to either eliminate the tax completely or adjust the thresholds to account for the 30 or 40 years that have passed since they were set. I don't know what the probability of enactment of that act would be in Congress, because it's a substantial income, a substantial portion of Social Security's total income. It was about close to 51 billion in 2023. I don't have the 2024 figure yet, but and so in order to eliminate that tax, you would have to compensate for that loss of revenue, which is $50 billion, almost 51 billion. So that was not discussed in the bill per se. So we'll see what happens. It's going to be interesting. There are multiple bills. As I said, one is to eliminate completely and one is to adjust the thresholds. Adjusting the thresholds would minimize the impact on revenue because there still would be taxes applied to upper income people. But we'll have to see how that plays out in Congress. And there have been bills submitted in Congress, repeatedly to do this for the past couple of years. So it just remains to be seen. Okay, living abroad. The
Oh,
most recent estimate I've seen is that there are about 700,000 Americans that are receiving
yeah.
Social Security benefits while living outside of the country.
Hmm.
There are some eligibility rules for that, as well as some restrictions. And I think Eileen is going to jump in now and talk
Yeah.
about that.
Well, one of the about receiving Social Security abroad, and Jerry is very right. It's about 700,000. It is now becoming a trend in a lot of about living abroad. So there are some restrictions. They must be a U.S. citizen. You must be eligible for benefits, and you must be living where Social Security can send your payments, because they will not send payments to Cuba and they will not send payments to North Korea. The definition of abroad, and like you see, is at least 30 days in a row, Puerto Rico, Guam, all the American territories. So if you are a U.S. citizen, you may continue to receive payments outside as long as you're eligible for payment and you're in the country where Social Security can send payments. If you're not a U.S. citizen, you must meet one of the conditions of payments. Now, I think the next slide would say what Social Security was going to do is they're going to send you a letter, and depending which country you are in, it's either they're going to send you a yearly letter or a one that's every 2 years. And it's going to be based also on the ending of your two last digits of your Social Security number. So if you're between, I can't remember off the top of my head, I think 00 to 49, you're going to get it on odd days, odd years, and then 50 to 99, you get it on even years. So if you live in, there's a lot of countries that you have to, and one thing, if they don't receive that letter, they will shut off your benefits. So, and if that happens, go to the U.S. Embassy, okay? And they'll help you set up the thing. But let's go into a couple of things, more detail. You can, like you, wherever, regardless of where they live, Social Security pays out about 6.1 billion benefits annually, according to 2022, but it has gone up a lot. I'm waiting to see what the new statistics will be for 2024. They're calculated in US dollars. The benefits are not adjusted for international exchange rate. So if you're living in a country like in the Europe, they're not going to change it to the euro. Or if you're living in other places, they're not going to change it to local dollar amounts, okay? And like you said, prohibits making payments in Cuba or North Korea. And generally, Social Security cannot be sent to, there's a list of countries down there as well. But they will make an exception in those 8 countries listed in the table right there. So, but it is important if you live outside the country or you plan to live outside the country, be aware that they will be sending you letters. So, to get that on a timely basis to them. Okay.
Okay. And we do get a number of questions from people that are part of that
Mm-hmm.
760,000 beneficiaries. We do get a lot of questions,
Mm-hmm.
particularly when they get the letter, the reminder letter, it generates questions and they come to us.
Mm-hmm.
It again becomes an analysis of their current situation, their personal situation. And
Yeah.
we've handled quite a few of those in the past
Oh, yeah.
year.
Yeah, we have handled some from Europe, South America.
Yeah,
So we have done a lot over in Asia as well. Yeah, we
right.
do get those. So,
Yeah. Okay. Uh, moving into Medicare.
oh, Medicare.
This
All
is
right.
this is Eileen. This is Eileen's area. We'll turn this over to Eileen completely.
Thank you. Just for a quick recap, Medicare is made up of Medicare Part A, which is your inpatient, your Part B, which is your outpatient, which is $185 a month. Part C is your Medicare Advantage plans, and Part D is your drug plans. All right. So but if you want a little bit more explanation than this quick, go into our website, amacfoundation.org, and go into the video section. We have something called Medicare Basics. It's a great little seminar. It gives you the basics of in a little bit more detail than what I'm giving you. But if you need one or a refresher course, go listen to that video. It's very good. So let's go. Social Security benefits cannot decrease. The hold harmless provision is basically saying that benefits cannot decrease due to the increase in Medicare Part B premiums. And that, well, a famous one was back in 2016 when Medicare blew up. And that's when this became in provision, because it lowered everyone's. So, and the COLA didn't cover that increase, so they did the hold harmless provision. Medicare Part B premiums must be automatically deducted, and it is automatically deducted from your Social Security benefits. Now, in how many people? Currently, there's not many because of the increase in COLAs. I mean, for 2024, we got an 8.7% increase. So that averaged gave people $140 bump up. However, Part B decreased. So it wasn't much, not many, if any, were held harmless. Now, this year, even though the COLA was only 2.5% and Medicare increased by 5.9%, CMS didn't mention it in their update. So still probably a very few people will qualify under the hold harmless. And so if this is a thing will happen if you switch from one Social Security benefit type to another. You are subject to the Part B premium amount being adjusted or increased to the most current standard Part B premium amount. There are other things, if you're new to Medicare, you're not going to be held harmless. People who aren't receiving Social Security benefits and people who pay a higher premium for Medicare because of IRMA. We'll discuss IRMA. Also, if you're held harmless and you have a Medicare penalty, that's not going to wipe out the penalty. Okay? You still have to pay that penalty. So this year, Medicare Part B premium is in 2025 is $185 per month. And that was a big jump this year, which was $10.30. And compared from the year previously where it decreased, this was felt. But Medicare didn't feel like it was, didn't make note in their report when they released the Part B premium about how many hold harmless provision. So now, as we discussed, this is a lot of people hate this, and a lot of people don't understand it. So it applies to Medicare beneficiaries with a higher annual earnings. Now, an additional amount added to the monthly Part B and D premiums for individuals whose modified adjusted gross income, what we talked earlier about, exceeds certain threshold amounts. It only affects like 5% of people with Medicare, okay? Unless you have a qualifying event, and they call that life-changing event, a marriage, a death, a divorce, a work reduction, a work stoppage, and a couple of other things. It will, unless you file, and you would file, if you have one of those situations, you would file SSA 44, a life-changing event form, and submit that for review from Social Security. Now, the higher premium, if you don't qualify that, let's say you sold a property, let's say you have 2 homes, and you sold a property up north and you moved down south, and that capital gains, which is included, it does not count. So it won't count as a life-changing event. So the higher premium will last for 12 months. And also I have to make clear that Medicare goes back 2 years. So it's 2 years previously. So if you sell a house in 2025, one of your houses or whatever, you're going to see and you report your capital gains for 2025 when you file taxes in 2026. And then in 2027, when Medicare looks back on your income for 2025, they're going to hit you with the IRMA. So on that capital gains. So there's been a few people. Also, if you always want to talk to your financial person, I know people that have converted their retirement accounts and took out money to do things that you really need to discuss with your financial, how that's going to affect your Medicare premiums. Okay. So now this is a chart of this year's. And like I said, your filing status and yearly income in 2023. You can see where the individual tax and then the filing jointly. Now, a lot of people, oh, well, we'll just file married and separate. It's not going to help you. Actually, it'll make it worse. So, it's, you either get hit at 106 or less, or it jumps up anything over 106, and between, you're going to pay 591.90. So, yeah, they've cut off a lot of that stuff. So don't, like I said, it's best to discuss with your financial advisor and your tax person. And if they're both in the same person, you're very lucky. And then, you can coordinate stuff that would affect you. Mostly your retirement, conversion of your retirement funds, basically. We see a lot of that. So, what do we have after that?
That's it.
That's it. Oh, okay.
Okay, we do have a couple of questions in the chat. Um, no, we actually don't. I don't see any questions.
Oh. Well, they can always call us if they don't want to put it in chat and they want a private conversation. They can always call us or send us an email at the above. The phone number, of course, is 888-750-2622, Monday through Friday, Eastern Time, 9 to 4.
Yep.
And the email is ssadvisor@amacfoundation.org. And of course, our website is. Now, Jerry, you want to go into the additional resources they can find, or?
I will in a moment. I lost my share here.
Okay, not a problem. So, we have additional resources.
Yeah, again, as Eileen mentioned, we have other resources that provide information on both Social Security and Medicare. Talked about this in the Wednesday session, particularly the socialsecurity.report.org, which is a website I would encourage you to examine, as well as the medicarereport.org. And we just concluded with a brief discussion on some Medicare issues. But if you go to the medicarereport.org, there is a lot of background information on the things that Eileen just talked about. And with the socialsecurity.report.org, there is a wealth of breaking news about Social Security. There's a lot of research information about Social Security. There's Q&A questions about Social Security that just provide a lot of background. We update these sites basically Monday through Friday. Every day there's a handful of new articles that are published, new announcements, and it's a good place to stay abreast of what's happening. Social Security Report is Social Security and retirement issues. Medicare Report is Medicare and healthcare issues. And they are just excellent repositories, really, of information about those topics. And generally, the amacfoundation.org website, our main website, also has a lot of information. There's information in there also about the Social Security Advisory Service, how to access that, who the advisors are. So I encourage you to check that. There's
Also veterans.
And veterans, yes, we have a separate veterans page that has a lot of information about programs and services that are available to veterans. The foundation operates a program called Foundation Veterans Outreach Project, and we meet, just give you a quick thing on that, we meet every month, once a month, with a collection of collaborators that get together and talk about things that are happening affecting veterans. And our collaborators include small organizations as well as some large organizations. And it's a good exchange of information. But on that veterans page, which you can access, and if you know anybody that's a veteran and has an interest in finding more information out, there's a database that you can access that has thousands of programs and services that are available to veterans on topics like suicide prevention, PTSD, and so forth. And it's keyword searchable. And when you search on an item and find a particular one that you're interested in, you can open that page in the database, and it has contact information, telephone numbers, email addresses. So it tends to be very helpful for people that are trying to zero in on services that can help them.
Yeah.
Okay, I think, again, I don't see any questions.
Nope.
Okay, I see nothing else. So
Nope.
with that, I will thank you for your attendance in our workshop. Those of you that were in on Wednesday, again, thank you for that. And just to reiterate that any questions that you have about Social Security or Medicare, just feel free to contact us. Our service, as Eileen mentioned, you can reach us through email, ssadvisor at amacfoundation.org, or the telephone number. Just feel free to get in contact with us, and our service is provided to the general public free of charge. And we will help you navigate the complexities of Social Security. I like saying that, navigate the complexities of Social Security. It is complex. We know that. We know that. And we created this service back in 2016, and we have built it from there to a service that really benefits thousands of people. And it's something that, and we don't know it all, by the way, but the things that we don't know, particularly when it comes to like Sharon and Eileen, they know where to find it. If we don't know it off the top of our heads, they know where to find it. So
It's only 110,000 pages.
yeah, and I think Sharon has read them all.
I think I'm getting real close.
Okay, so with that, we'll end today's webinar. And again, thank you very much. This webinar, as well as the one on Wednesday, has been recorded. And as soon as it's edited and downloaded, will be appearing on our website, the amacfoundation.org. So you can find it there. And I guess that's it. So thank you very much again. And we look forward to seeing you on future webinars.
Thank you for attending.
Have a happy Valentine's Day.
Oh,
that-
yes.
That too.